Welcome to Hedge Interview. This episode is part of the Investor Views series, which features family office investors and other institutional investors from around the world. My goal is to help capital seekers understand marketing and communication best practices for developing meaningful relationships with allocators. My guest today is Saad Hassan. He is the founder and CEO of Nvestiv, and he is the president of Hassan Family Office. He has many years of connecting capital seekers with investors, and he has raised over 15 billion from wealthy families and institutional investors. Welcome, Saad. Thank you for joining me today.
Hi, Jennifer. Thanks for having me.
So let's start off with give us a background on how you develop. What is Investive, and how and why did you develop this platform?
So Investive is a capital markets platform or ecosystem, let's call it. It started out as a small piece of technology which allowed family offices to qualify deal flow. So I had in my past life worked with many family offices. We did deals together, and one of the common questions that we always got were, how can we automate our deal qualification process? That's something that is a challenge for most investors, whether it's institutional or whether it's family offices. So, given my background in finance and in technology, they said, well, you're uniquely equipped to be able to create something that serves our purpose. So we just simply built a tool which allowed investors to go on and set their investment criteria. And we, using the technology and machine learning, were able to look at all the deal flow that's out there and match them to the investors that had a very specific appetite for those types of investments.
Get your data from?
User input, actually. We don't like to take any third-party data. So given the platform that we built, as we grew our popularity base, a lot of those investors, they were driving sponsors, fund managers, direct deals directly onto the platform to fill up profiles, just so that it would give them a very streamlined understanding as to what level of fit there is. So through word of mouth, it started spreading, and we have a pretty large base of deal flow that have created accounts with us, and they've specified these are our specifics, and it just tells the investors, okay, this is a 98% fit to your overall criteria. This is we benchmark it with other deals and say, okay, this is a terrible deal compared to what you're looking for. So that's what it started out as. We've also then used third-party data to augment the data that we already had on these guys. As our algorithms became a little more sophisticated, we started, being almost a credit score for these businesses using our own algorithms. So it's an internal thing that family offices we do. We don't really advertise it too much. You'll find that we never show, ads or digital campaigns or anything like that, because really it is meant to be a free tool for all investors. But as a result, it does attract a lot of sponsors, and we've created that tool into a business eventually, which, we charge our sponsors success fees based on the capital that we do raise for them. And then, sticking to the theme of providing value for the players in this industry. I call them, the brokers of the world, the deal sponsors, the investors. We created a data room feature, which I think is very needed, because the other complaint that we kept getting from the family offices were, they were never going through data rooms because they were usually Google Drives or Dropboxes, and at the high end, a DocSend, right? Which were very unorganized, unstructured, almost folders, which you just drag in whatever you want. And, I can use Dropbox to share photos, my weekend photos with my friends, right? That's not highly intuitive with an investment structure. So we built a structured data room, which helps sponsors fill in their information and create data rooms which they can share, get analytics and stuff like that, much like a DocSend does. So that's a free feature, for example, that we've made available. It just unifies the way and standardizes the way that family offices are starting to see deal flow. And so that really is what Investive is.
Wow, that's cool. Now, how do you qualify? Who gets to be on Investive in terms of a sponsor?
Oh, that's an interesting point. So we had the luxury of not having to get clients first. The typical aspect of any business, especially in a marketplace model like an Investive, is it's a chicken and egg scenario, right? If you get the sponsors, you need to have the investors, and if you have the investors, you need to have the sponsors. So which side do you grow first?
Mhm.
Because we started with our unique approach, which is here's a free tool for investors, we already had a large base of investors using it. So we take form information of investors' criteria. It's about 80 plus touch points of each investor's information. Um, Multiply that by the currently 4,500 or so investors that we have. And you could imagine we have a very large aggregate set of data on what the pockets of demand are within our business. So we can see that I'll give you an example. Recently, with the markets crashing the way that they did, a lot of investors, they shifted their priorities away from equity investments towards debt strategies. And we started seeing those changes as investors went in and updated their profiles. So where in the past we were looking for deal flow in private equity towards higher risk factors, now we're looking at very, risk averse strategies and debt looking for 8 to 12% returns. Geographic focus we started seeing shifted to their local areas as opposed to outside of where they were. So these are all interesting statistics and analytics that we see based on the aggregate data. And then we use that data as a rubric to qualify the manager sponsors that we see. So if we're trying to fill a particular spot, we'll speak to 7 or 10 different sponsors at the same time, give them our rubric and say, how do you align with this rubric? We'll interview them, and we'll have a committee that decides, okay, let's bring on 2 or 3 people that are doing something similar in this space, just to provide an option for our investors in that category. Yeah, it's a very demand-driven approach. It's not a supply-driven approach, which allows us to keep our conversion rates really high. But at the same time, it really does facilitate good conversations because our focus is not volume. Our focus is qualification.
So are you working with, do you find that you have more like funds or asset managers or, direct types of investments? What types of investments do you cover everything? What predominantly are the offerings on your platform?
So we don't touch public markets, except for hedge funds. And so we do alternative investments in private equity and private debt, real estate, venture capital, startups. Startups very recently, we haven't really had any interest in startups. Energy, natural resources, infrastructure, things like that. Generally, it had been funds in the beginning when we first started. We saw a very large shift towards direct deals in the last year and a half. Not only from our demand side, but then obviously, as I said, as a consequence, we started onboarding a lot more direct deals to satisfy the needs that we had. So, even in real estate, even in venture, right? So I use the example of startups in the past. We had a lot of institutional investors that were investing into venture funds, a lot of family offices that were interested in venture funds. Pretty soon they realized that, the concept of venture is not that difficult anymore. And people decided, hey, maybe we can avoid a layer of fees. Right? We already get a lot of pitches to startups. Some of these family offices actually built their wealth in building some sort of company or technology. So they have the experience and all of that. And they said, okay, let's try our own hand. And also there's this youthification of family offices that's happening right now. The baby boomers are now passing on their businesses to their younger generation, and the younger generation tend to, based on my experience, have a better interest in direct deals that they can touch and feel as opposed to an indirect investment through a fund.
Interesting. Now, there are a number of different varying types of platforms out there that are connecting investors and allocators. Investors with capital seekers. So how would you say that how do you differentiate Investive, the Investive platform? What would you say is one of the most unique features of it? It's different.
Well, there's one. Well, first of all, we get compared to crowdfunding platforms a lot. We're not crowdfunders, right? We work with very sophisticated investors who will not ever write a check or do a transaction online. They require 3 to 6 months of due diligence prior to writing a check. So what we do is we create connections. We don't actually facilitate the payments and et cetera on the platform. We work with accredited investors only, right? The smallest investor that we have in terms of their net worth, I believe, is about 14 or $15 million, right? So no retail investors. But then most importantly, this is something that is a high priority to us as a family office, but to all family offices is the privacy. We sometimes get bucketed into a database sometimes, where we get compared to a PitchBook or a Crunchbase or a Preqin or something. We don't list our data. The interesting thing about Investive is that the accounts you create and the information you provide us are extremely private. We use our internal algorithms to match you, but we do a blind match. It's a double one. So if you're a sponsor and if I'm an investor, when we are seeing each other as matches, we're not seeing each other's identities. We are simply seeing the inherent qualities of the information that we've provided and why we're a match with each other. Only when we've mutually agreed to connect with each other will our identities become revealed to each other.
Wow, interesting. That's great.
So
and then what happens? What is there, like an email exchange, and how do things move forward?
So when a sponsor sees the investor's information, the investor's happy because they've opted in for that conversation. So it's no longer a cold call for the sponsors to reach out. So it's a matter of the sponsor looking at the investor's emails or their phone numbers and say, hey, look, we've connected on Investive. When can we set up a time? We have a inbuilt scheduler, which is just based off of a Calendly. So they can schedule with each other. And there's a lot of different things that they can do. But the whole idea is that we create connections that are mutually aware of each other. And that's really our differentiating factor. That privacy aspect, that wall of privacy is what allows family offices to have confidence in working with us. And we wouldn't have done this if it hadn't been for the fact that we developed this whole thing with the help of family offices. So they told us exactly what they needed, and we just went and built what we were directed to build.
Excellent. And so if someone wanted to find out more information about Investive, would they go to your website, or do you have an online presence, or how would somebody reach out to you?
We have LinkedIn, we have our social, but investive.com is the place to go. The nice thing about Investive is that because we're technology, you can actually create an account for free and just start browsing around to see what the app is like. The data rooms feature is free. I mean, a lot of people use the data room, so they don't even use us to raise capital. And then the premium feature, what we call Iris, is our matchmaking system. So that comes after an upgrade, but it's very easy to kind of get a feel for what it is that we do without having to pay anything, and that really kind of builds that trust.
Very cool. So now, just shifting gears a little bit, you're also head of your own family office. And what are your focus areas? What interests you?
Alternatives, private equity. I have an outsourced portfolio of the public. Any family office, as you know, we have a balance in our portfolio. So all the public market stuff I've outsourced to money managers and et cetera, because that stuff really doesn't interest me. What directly interests me are the private investments, the ones where I can roll up my sleeves and get involved. So that includes the real estate, that includes the startups and the ventures, private equity deals. And when I say private equity, I mean things like, recently we've just done a deal where we built a data center in Finland, right? So things like that interest me. Startups, we have about 16 portfolio companies under our belt right now. Few of them have exited already. Few of them are yet to exit. I believe they're waiting on the markets to clean up a little bit. But yeah, those kinds of things that really require involvement from an early stage, as opposed to they're already a well-oiled machine. That's really what the differentiator for me.
And so now, in terms of how you are attracted to a particular investment opportunity, how does somebody pique your interest? How do they do people contact you directly? Do they set, how does someone get your interest?
We've I was mentioning this to you earlier. We've done a pretty good job of keeping ourselves off of databases and etc. So it's not often that deals come to us, but in our involvement and in our work, there are people who know of us, and so a lot of our deal flow comes from other family offices. We are not that experienced of a family office and haven't been around as long as some of these other guys. So we don't generally lead the deals. We jump onto and piggyback other deals with other family offices that we like and trust. You'll find, I'm sure you know this already, that family offices, they like to work with other family offices. There is
Yes. Very
yeah.
collegiate. That's something that I think a lot of capital seekers don't necessarily understand, is that, if you mess up with one family office, you've messed up with many. So you want to, be very careful and be very diligent in your process, I would think.
Yeah, and the other thing that I would say is very important is sponsors who are looking to reach out to family offices. I mean, myself, for example, it's very important to understand what the priority of that family office is, right? And the two main archetypes of that would be, wealth generation and wealth preservation.
Mhm.
A group like us, considering we're younger, not only are we looking to preserve our capital, but we're obviously looking to grow that as well, right? But a larger, more established family office may not be as interested in higher risk or speculative types of investments, and they're more interested in just preservation. So the thing I say to all capital seekers is we understand that you all have a list of family offices and a list of investors. The list doesn't really mean anything. What means something is the relationship that you have and the understanding that you have with those family offices and their investment criteria. And every time you call somebody about a deal that may not be a perfect fit for what they're looking for, that's one less phone call you have left in the chamber.
Yeah.
Until they write you off and say this is a sort of dud situation. This is not something that's good for our pipeline. It's a waste of our time. So the first few conversations, those that do really well with us are those who take the time to understand us and understand what we care about and what we don't want. I've used this word before. The name of the game is disqualification, right? And those who do that well tend to either get investments from us or get referrals from us.
And so I often advise capital seekers to find out something about the family office that you're going to reach out to. You can't reach out blind. You have to know something. You have to demonstrate that you know something. And so often I will say, do you know, mass mailings, like you have to, your communication needs to be very customized. You need to learn something about who you're reaching out to. And I often say, a social media, the social media platform that matters is LinkedIn, because often family offices will sometimes, not often, I can't say often, but in their profile, they will often say what their mandate is. And they'll say, we are invested in X, Y, and Z sometimes. But what would you say, it's sort of, as you use that term, chicken and egg, like how would one find out about what you're interested in? Given that family offices are fairly low profile, and they don't want to waste your time, but how would they find out potentially?
So
There may not be a good answer to that.
there actually is. We've done a lot of internal reviews about this. I've spoken to many other family offices, and I've found that their answers to this is a lot different from mine. Maybe because I'm newer at this. If I'm around for a couple of decades, maybe then I'll have a different outlook on this. But here's what I feel. This is coming from Arab family offices. So some of the larger, family offices / sovereign wealth funds out of the Middle East, they get pitched by startups from small businesses all the way up to large funds like Brookfields and KKRs. And the one thing that, the feedback that we've always gotten, and I fully agree with this, is that people often tend to treat family offices as a bank as opposed to the fact that they're people. Most family offices, they've built their wealth doing something. Some of it is family money from previous generations, but my family office, for example, started with a technology or a company which gained me some success, and I was able to reinvest that into investments. So that makes me a normal person. It makes me, a person who is more integrated into the world than a large, multi-generational family office, for example. So people have translated the example of, well, these are large, banks into this capital raising process, and they've forgotten the fact that there's a person that's making that decision. And if you forget to treat the family office like a person, if you're contact like a person, you will end up not building a solid relationship with them. One thing I've found all the time is that people suddenly start using big words with us, right? A conversation with a family office really isn't an excuse to start throwing around your vocabulary. Talk to us like you're talking to a normal person, right?
I'm so glad you said that, because I often tell people, I'm like, no technical jargon. Don't if your grandmother wouldn't understand. I mean, these are real people, and not everybody knows your technology or your space the way you do. So
Not even
talk in the
the
clearest terms. I mean, these are sophisticated investors, but you still don't show off with jargon.
jargon is one. Even, for example, when you're speaking to somebody on LinkedIn, I'll give you an example. So we had somebody within our group evaluate all of my conversations. So I had been away for the last year or so, working on a project overseas. And so I left somebody control of my LinkedIn. Now, a funny story, because she looked at my stuff and said, look, I noticed a pattern while I was monitoring your LinkedIn, and I noticed that you interact more with people who are casual with you versus those who come to you very formally. Mm-hmm. I noticed, and she very specifically pointed out, she was like, I noticed people who use their full words in a LinkedIn chat versus those who, truncate, or those who use apostrophes and abbreviations. She was like, is there a reason for that? And I realized it's just a subconscious bias, right? Because that's how I speak with my friends, and that's how I speak with my peers. And so when I see that, it automatically mirrors me. And that's what's interesting to me. People forget to do that. These little things matter. So to answer your question directly, going in this long way, get to know the family office first, speak to them about other things. Remember that there's somebody, who built their wealth in something. And I've found that people love to talk about themselves, right? So you ask a family office, or you ask an investor how they got to where they are today and what kind of things they've done to get here. An indicator of future investment is past investment, right? Or past activities. Getting to know that and asking casual questions will lead to the family office or the executive just looking at you and saying, okay, well, what are you doing? What are you working on? And that is a good transition. Don't bring it up yourself. Just have a conversation.
Right. Well, you've covered a lot of the best practices of what to do in terms of communication. And so what would be sort of $1 million mistake or a $5 million mistake? What not to do that you've seen that you're like, oh God, that this is just, please don't do this.
I will, and anybody who is watching this, who is an investor, will agree with me. PowerPoint. The moment you pull up a PowerPoint in a first pitch, mm-hmm. You've lost me.
Okay.
I can read that stuff after, mm-hmm. Right? Now, if you want to take me to a slide to actually show me visuals, okay, understand, not a problem. But if you're going slide by slide, going through the problem slide and the solution slide and then competition and market size, you've lost me. And I believe that, I believe that's the case with everybody. Because look, you have to understand, like, family offices get anywhere from 500 to 600 pitch decks a day in their emails. And I wouldn't say that we're reading them all, but we're reading at least 30 or 40 from time to time. So, and there is this idea that all pitch decks and presentations tend to be the same in the same format, just to create some consistency. So we know exactly what page to navigate to when we're looking for certain pieces of information. That comes with diligence. We're not interested in that. We want to know the color commentary around what you've already provided us.
Right.
And that's the most important thing about a pitch that really derails things in the very first conversation. And then the other thing that I would say personally, I've had a lot of data rooms sent to me, once we're conducting due diligence. The one thing that really, really sets a sponsor apart are those who are upfront with their background checks. To be frank, most people don't care if you have a criminal record.
Interesting.
Most family offices don't care if your criminal record is not related. I've invested in people who have, DUIs. I've invested in people who were accused of murder, but they were let go, but the court documents remain, so it will show up in a background check. They were proven innocent, so I don't hold it against them. I look at their work and I see, okay, this is what you've done. So those things don't really matter. I know some family offices care about that stuff, but the only thing that would prevent me is financial related, fraud related crimes. Everybody knows that already. So, and we will do background checks. That's part of our initial due diligence, right? Family offices, it's not that we're opting to do a background check on you. It's more along the lines of, this is our process. One of our analysts will press a button that does the background check automatically. And when those things pop up, if you're not upfront about it, it really casts a shadow over the entire deal. What really has popped up to us in the past there are some sponsors who will spend an extra $3,000 or $4,000 to do a full level 3 search on themselves and provide that third-party report as part of their data rooms.
Oh, wow.
It may not have anything in it. It may be completely flag-free, but it gives us a level of confidence to say, okay, these guys understand what we're going to do and what we're looking for, and they've taken the time to do it. Now, yes, it spares us an expense. Family office, we're willing to take the expense. That's not the issue, but it spares us the time, and that time aspect is important. So that really speeds up transactions.
Interesting. Okay. And so now, in terms of how you mentioned data room, you had said don't do a presentation in your first interaction, but do you require a presentation? What do you require to review? What are the materials that you would want to review as part of your due diligence?
Actually, that's a matter that's very close to my heart. The reason why we built the data rooms is because most people don't know what to put in the data rooms, right? So our structure is, we have a section which is a summary. We want a pitch deck. We want a maybe 2 to 3 minute video pitch, if it's possible, and a summary, an executive summary. Then there's a section on a financials. So if it's a fund, we want their pro formas, we want their projections, we want their expenses, and we want a drawdown of how they're going to be spending their capital. The legal stuff matters, licenses, zoning requirements, any IP that they have, if it's a company. Traction is very important. And the one thing that I find myself, uncontrollably attracted to are LOIs and offtake agreements. If a company comes to us and says, look, we want to build this, but if we can build it, then we can ship it to our customers because of these signed offtake agreements when sold. It's a very simple conversation after that. So that's on the customer side, but even on the investor side. So in our set data rooms for Investive, we have a section that allows you to upload the LOIs of other investors who are soft circling the deal. And I suggest it to all of the sponsors that I've ever worked with. And I say, look, if you're having a conversation with an investor that enters due diligence with you, where they're looking at your data room, have them sign an NDA, right? that NDA should have a clause that says, hey, let this be a letter of intent or something along those lines, that I'm conducting due diligence in order to assess an investment opportunity, and therefore the NDA must apply. Just that first clause makes it a letter of intent, and you can put that letter of intent into your data rooms, which allows you to showcase that you're being looked at by others. We are human beings. We have a herd mentality, right? So when we see notable investors looking at this deal, whether they plan on investing or not, it immediately piques our curiosity. So
Right.
little things like that we care about.
Very, very helpful. That's very valuable information. I really appreciate your input on that. So my last question is going back to, I'm going to ask is going back to what you said about, don't do a presentation up front. What would be your ideal initial interaction, if not in that format? What is your preferred format as far as that goes?
If you're pitching a family office, as I said, people love to talk about themselves. So ask the questions and don't be the one being interviewed.
I see.
That's the most important thing, right? Take charge of the conversation and say, look, I'm interested in the family office. Talk about fit, because we're thinking it in our heads. Just address the elephant in the room, right? It has to be a fit, but it has to be a fit for both sides. I mean, sure, we're evaluating an investment, but the investment opportunity or the sponsor also has to understand that they have to evaluate us as well. KYC, AML, those are all important aspects that goes towards showing that the manager also has control over whether to take an investment or not. Now, because they're searching for money, they have this, this easygoing nature of I'll take whatever I can get. But that doesn't get you investors. If you can create some level of exclusivity and say, look, this is a deal which we're very picky about. We want the right people in our cap table. And we want to understand fit because we want to see what strategic value you bring. Those are conversations that, they're simple sales tactics, but it works on a human mind because we want to feel that way. Right. Family offices are shameless in explaining this, that we want to feel exclusive. We want to feel that clubhouse mentality, right? So that is really what attracts us. So I would say spend the first conversation, maybe even the second conversation, just getting to know the family office, getting to know their investment mandates and criteria. Come with a questionnaire that you ask, look, do you invest in these localities? Do you invest in this class? What are your projected or your expected returns, right? Ask about the due diligence process. Explain, look, this is how long we have of a window to raise, right? Does that fit into, if we kicked off due diligence today, would you be able to manage that time? And if they can manage it, would you prioritize this investment compared to the other investments that you're looking at, right? There's a lot of different things that are moving variables that lead to an investment, and to really qualify those down from the manager standpoint, it's very important. And then I had one very successful money manager they told me this, and they've raised billions. They said, look, the one thing that really triggered me into success, where I wasn't succeeding before, was understanding one very small but simple fact, that yes, we have an important need to raise capital, because our competitors and I are going after the same capital. If I don't get there, somebody else is going to get there first. But he understood that investors also have a need to invest their money. We don't want our money sitting around in a savings account, right? We need to put it to work. Take an institution, for example, a pension, when they exit, or in the last couple of months when there was a major sell-off in the markets, that money is no longer sitting there in a bank account. There's an algorithm that families or institutions have, and they say, we have to rebalance our portfolio by taking this capital and putting bits and pieces into certain asset classes so that we bring ourselves back into equilibrium. And we have a deadline to allocate that money. So we're actively looking to allocate just as much as somebody is actively looking to raise. So the need is there on both sides, especially with inflation and all of those things that are happening. We have to make sure that our money is growing at a faster pace. So understanding that makes a capital raiser aware of the fact that the need is there. It's about finding fit and finding the right people. And the moment you can establish that, and the moment you can demonstrate that to an investor, it's a very easy conversation.
This is very valuable information. Thank you so much for sharing these insights today. This has been super valuable and much appreciated. You've covered everything that the gamut of what I really wanted to glean from you and your experience as far as how to approach allocators. So I really appreciate your time today. Thank you so much.
This is fun, actually. I actually enjoy talking about this stuff. A little less about the family office side because we try to stay private. But when it comes to the capital formation, the capital markets, it's something that I'm extremely passionate about. It's something that I've done in the past, raising capital, and now I'm on the allocating side, and it's interesting. You get to see into the minds of other people. So I appreciate the chance to actually be able to talk about it.
Great. Well, and also, just what from being a family office and just collaborating with other family offices, that just your willingness to share that information is really helpful for people to do it right, and not miss the chance to line up in a way that is a win for everyone. So again, I really appreciate your time and thank you.
Absolutely.